This is the Asia Trade. I'm Shery in Seoul.
And I'm Paul Allen in Sydney. The top stories this hour. Asian stocks set to extend gains from Wall Street as data showing a surprisingly healthy US labour market boosts sentiment. Bonds slip while the dollar makes gains. President Trump signs the order to hike steel and aluminium tariffs to 50%, as his Treasury Secretary warns that China it has a choice to make on trade. And South Korea elects Jae-myung as president, looking to turn a corner after 6 months of political and constitutional chaos.
And that turmoil in South Korea really hitting the South Korean economy. We are now seeing some of that reflected on the CPI data coming out right now. We're seeing May consumer prices rising only 1.9% year on year, coming in below economists' expectations. The month-on-month number actually contracting about 0.1%. We're seeing soft domestic demand here in South Korea, also cheaper gasoline prices. So we'll keep an eye on the fragile state of the South Korean economy. But all of this, as we have seen Korean assets rally ahead of this snap election, of course, there's a lot of optimism about a turnaround when it comes to the South Korean political landscape, not to mention the economy as well. Take a look at how Nikkei futures are setting up, not doing much at the moment, but this after 3 sessions of losses already. We're watching the Japanese yen very closely as well. We had seen it weaken against the U.S. dollar. We're seeing a little bit of a pickup on the U.S. dollar in the overnight session as well, something that we'll be watching closely today as well. The Australian GDP numbers, slowdown expected on that front, Paul.
Yeah, let's take a look at how US futures are shaping up. We did, of course, get a rather positive JOLTS report, job openings report out of the US, suggests the labour market's still pretty strong there. A little change for futures at the moment, though. That data series can be notoriously choppy as well. If we take a look at bonds as well, also not a great deal of movement for 10-year futures there. We did hear from the Fed's Raphael Bostic. He says, well, they're in no rush to move on rates, and he wants to see a lot more progress on inflation first. Also, some concern that you may be aware of over Section 899 of the Big Beautiful Bill that might accelerate the Sell America trade by deterring foreign investors, and certainly Elon Musk had some colourful remarks on that bill as well. Quick word on oil prices, holding up surprisingly well considering the OPEC Plus production increases that we've seen. Data for May shows a 200,000 barrels per day increase. There is, of course, more coming in July as well. But wildfires in Canada are disrupting flows to US storage hubs, and Russian crude shipments also fell, but crude prices holding up pretty well there, 63.37 a barrel at the moment. Shery.
And Paul, to our top story, Jae-myung will be sworn in as South Korean president today after pledging to do everything he can to revive economic momentum and improve people's livelihoods. We already heard from Secretary Marco Rubio also congratulating Jae-myung on winning the presidential election. Let's bring in our Seoul Bureau editor, Danny Thomas here. And Danny, I barely had any time to wrap my head around calling Jae-myung President E. I mean, he didn't even have time to be president-elect and incoming president. There's no transition period.
Absolutely. It's been a very rushed in, and this is how it's supposed to be. But even then, people were not ready for this kind of a swift transition. But yes, finally, we have a new president after 6 months of chaos, and he will be sworn in at 11 today. And as you said, the economy has been dragged down by the uncertainties, and I think his first order priority is to make sure that he pulls it best to get the economy back on track.
Tell us a little bit about who Jae-myung is, so we get a sense of what sort of policies we should expect, because he has turned a bit more centrist lately. He has.
And that's one thing he learned probably from the last election, which he lost by the thinnest of the margins. He knew that he had to be more centrist, and that's what he has done. And I think he has also moderated his views around how he will take on Donald Trump. So all that shows he's going to be more practical, more pragmatic as he approaches as a country which needs a lot of support from policymakers. And that's what he's trying to do. And he's make the right noises. And even though he's been pro-North Korea in the past, he's also been a bit more restrained in terms of how much he wants to do reopening the dialogue with North Korea. So he has become much more not a statesman yet, but I mean, he wants to appear more like a statesman as opposed to an opposition leader. And that shift will probably reflect on what he will be announcing in the days to come.
Yeah, Danny, of course, the steel and aluminium tariffs are coming into effect today. Is President Yi's first phone call going to be to President Trump? When's that going to happen?
Well, we don't have a time yet, but definitely, I think after the swearing-in ceremony at 11 local time, his first order of business will be calling President Trump. And look, he has a host of issues to discuss. He was very clear that South Korea should not rush into a quick deal. So how much of that, friction will appear, will come up in the first call is yet to be seen. But he will approach it a bit more cautiously, as opposed to the previous conservative government, which wanted to go ahead and sign a deal, wrap things up quickly.
We got the CPI numbers and really showing that soft demand domestically, but it's been interesting that Korean assets have rallied toward this election.
It's been, I think, especially because there was a clear, from the get-go, there was an expectation that there will be a new government coming in and there will be a stability returning. A lot of investors have positioned themselves in the run-up to it. Now, if you look at the last overnight action, the market was pretty muted. The ETF just moved 0.2%, which means a lot of the news is already factored in, and people will now wait and see what Lee Jae-myung says and what all promises he's made is going to translate into actual action before they take further positions and further bets on the market.
Danny Thomas, good to have you with a breakdown here of the elections. Bloomberg Seoul Bureau editor, of course, as we will get more reaction to Lee Jae-myung's presidential victory coming up with the Stimson Center and Yuanta Securities as well. Plus, a former trade minister tells us how Lee may handle relations with President Trump. Much more ahead. This is Bloomberg.
Well, let's get a preview of the trading day in Asia with our executive editor for Asia Markets, Paul Dobson. So, Paul, I want to start in Korea, obviously. We've got the Kospi hovering around 9 months highs, a dovish BOK, a new president as well. But is all this news priced in, or can we expect another move higher for Korean equities?
Good morning, Paul. On the surface of it, you'd think that a lot of it is already priced in. This was the expected election result. We saw the biggest South Korean ETF in US hours only lifting 0.2%. So no fireworks there. But as you said, there is a favourable and supportive backdrop now for the equities market. It's not too far off entering that sort of bull market territory. The 20% gain from the bottoms, and the government is explicitly talking about the idea that it wants to see higher equities over time as well. So and if you look at it as a breakdown, the main beneficiaries of more stock turnover at least could be the brokers. So people will be looking in that direction. Possibly the direction of stimulus in the energy sector will lean more towards renewables. So have a look over there as well. And in general, kind of if the spending plans are going to mean extra bond issuance, then it may be a little bit of a negative on the flip side there for the fixed income markets.
And Paul, as we're speaking to you, we're now getting a redhead on the Bloomberg that Walmart is cutting some Florida store jobs after immigration rulings. Of course, we have seen some changes with the Trump administration on that front. And just pointing this out because, of course, we got the latest job openings data, and we're just trying to make sense of what that means ahead of the payrolls numbers, because this had big implications for the markets on Wall Street overnight.
That's right. And the market took an increase in job openings as a positive, as a sign of health in the US labor market and an encouragement. And so we saw equities higher, a little bit of weakness in some sectors, but overall, taken as a positive, the dollar also gaining. And I think that's kind of interesting. I was wondering, would the market think that good labor market data at this point in the cycle is good news? It's going to keep the Fed on hold for longer, most likely, or kind of bad news because of that. But actually, the Fed speakers have all been telling us that they're pretty confident on both sides of the mandate. They're pretty confident in the robustness of the labor market at the moment. They're pretty confident that inflation over time will come down. And they're talking about the idea that later in the year they'll be able to move towards cutting interest rates. So the market has that in the back of the mind. If the labour market holds up, then it suggests that they're not going to need to move any faster. But at the same time, it suggests that the economy is ticking on. But So, as you said, we have to watch. There have been some other sort of signs of companies scaling back a little bit, putting in some layoffs recently. So we'll see whether the non-farm payrolls number that we get on Friday tallies with the positive hints that we got from the job openings data, or whether it gives us a little bit more of a wake-up call in terms of how joblessness might be rising.
And Paul, we got the dollar spot index grinding lower. It's around 2023 lows at the moment. Do we anticipate this trend continuing?
I think that's the sort of mega trend everybody's talking about at the moment, right, Paul? That idea that we're in for that long and sustained downward path for the US dollar, which, going back to where we were at the start of the conversation, maybe another thing that's supportive for the Korean won among Asian currencies. Also keeping a close eye on the yen, even Singapore dollar close to some pretty significant milestones as well. So the idea that people would be putting more money out of the US and spreading it across the rest of the world may be supportive for Asia's FX markets. Not going to be, say, that case every day, but in general and over the longer term, that's kind of almost independent of monetary policy and the economy and everything else. It's more about this idea that actually US assets are extremely overvalued and overowned by the rest of the world, and there could be some sort of a recalibration. People looking into to deploy a little bit more of their cash into other markets as well. That we'll see that sort of slow, long-term easing of dollar valuations from here.
Bloomberg's Paul Dobson there joining us from Singapore, as we're also watching the offshore yuan. Of course, it advanced both onshore and offshore. In the last session, we were really watching those trade negotiations unfold between Washington and Beijing. U.S. Treasury Secretary Scott Bessent now taking aim at China's economic imbalances. In a video speech to a conference in Switzerland, that's where the U.S. and China hammered out a fragile trade truce last month. Let's bring in our North Asia correspondent Stephen Engel in Hong Kong. And Steve, sounds like the U.S. is perhaps dishing out a similar narrative on China as we await a possible Trump-Xi phone call.
Yeah, I think that Xi-Trump phone call or video call that has been long promised by the White House is what we're all waiting for to bring the temperature down. Because, of course, after we saw Scott Bessent and He Lifeng and others in Switzerland last month kind of hammer out a truce and build a relationship going forward, as more time goes by, the more we seem to get back to the same old issues that has brought these relationship down between China and the United States. So there hasn't been a lot of momentum. So what you saw overnight is Scott Bessent, the U.S. Treasury Secretary, who is now the point person of the Trump administration on trade negotiations with China, essentially roll out the similar message that we heard throughout the Biden administration as well, that essentially China has an imbalanced economy. He called the large real estate overbuild. He didn't want to call it a crisis, but he called it an overbuild. And the way for them to stabilize their economy is not to export deflation and excess products, that excess manufacturing capacity, but is also they should be focusing on fiscal stimulus and building the domestic economy. These are issues we've heard over and over again, allegations from the United States. So what really needs to happen now is Xi and Trump to bring the temperature down, have that video call or phone call, and move that truce into a longer deal, potentially, where the tariff threat that still hangs like the sword of Damocles over this relationship can be, have more certainty. So right now, it's a period of uncertainty going forward. And my advice, no one's asking for it, but my advice would be stop promising a Xi-Trump phone call, because it just makes Xi hold back and not want to appear to be coming to Trump's motive.
Steve, any advice for China-EU ties, or not advice, but observations about where they might be heading? Words obviously being exchanged over a medical device procurement spat. So what's happening there?
Yeah, so China has, basically lashed out at this latest EU members, basically overwhelmingly voting to, block China from the medical device procurement market, or the Chinese manufacturers. That is something China has lashed out against, saying that it is a move that is protectionist and is going in the wrong direction. Of course, the China-EU relationship is important as it relates to, of course, the U.S.-EU relationship, as there's some friction there. China clearly wants to see a better diplomatic relationship with the EU, and that also means better economic ties. But this spat, which has brewed over the last few weeks, also has been brewing for more than a year, as the EU launched this investigation into the procurement medical device market for Chinese manufacturers, and now they've taken action. China overnight, or actually late yesterday, essentially saying that the move is protectionist and vows to take action to protect China's interests. Keep in mind, there's going to be some very high-level contact between EU officials and China coming up. In the next week or so, in early June, we're going to be seeing the Commerce Minister, Wang Wentao, due to meet EU trade officials in Paris. And then next month, in July, EU leaders will be traveling to Beijing for a leadership summit with the Chinese officials. So they have time, and they have FaceTime to hammer out their differences, whereas China and the United States, obviously, we're still waiting for any kind of phone call, potentially.
All right, Bloomberg's chief North Asia correspondent Stephen Engel there in Hong Kong. Well, Ukraine says it attacked the Crimean Bridge with explosives as Russia closed traffic on the route that links the annexed Black Sea Peninsula with the Russian mainland. Now, this follows this week's drone attack on Russian warplanes, which the White House now says President Trump was not told about beforehand. For more, let's get to Bloomberg's Michael Heath. And Michael, let's start with that bridge that links Crimea to the Russian mainland. It's an obvious vulnerable choke point, not the first time it's been hit. Probably not going to be the last either.
No, that's exactly right, Paul. It's a really symbolic thing. You know, this causeway, this bridge that links the Crimea to the Kerch Strait, and obviously it sort of harks back to when Ukraine first overthrew a pro-Russian government in 2014, and this bridge was built to link Russia to Crimea, which it had annexed. But it's really interesting. I mean, as you said, it's been attacked before, and it also points back to these drone attacks. I mean, just how Ukraine is able to get access to this infrastructure and these sort of assets, despite them supposedly being guarded, despite them being really obvious. I mean, this bridge is a really, really obvious target, and being able to do this again. And I think the idea here from Ukraine is that, given Russia's sort of maximalist demands when they've had these negotiations, that Ukraine can't do a huge amount on the battlefield. Russia's just got more arms, more men, you know, the ability to keep going, but it's got to sort of prop up morale at home and also signal to Moscow that it's going to keep paying a price if it doesn't want to talk about this, and to the West too, that Ukraine is not down and out. I mean, that's sort of what the White House has been, well, President Trump particularly, has sort of been signalling that Ukraine's got no real cards to play. Ukraine is saying we're still in the game here. And, you know, this news sort of comes as well that Ukraine's also going to attend the NATO summit this month, which is kind of important because if NATO had excluded them from that again is a win for Russia. So Ukraine's sort of trying to say we're still relevant and still keep sort of the world's attention on what's going on in this conflict too.
I mean, you mentioned President Trump, and it seems he wasn't aware of the drone attacks by Ukraine, according to the White House. How much influence does Washington still have in this conflict? I mean, you and I talked before about how, despite President Trump's high-profile involvement here and trying to be a mediator, he has not necessarily helped convince President Putin to back down.
Yeah, I mean, Shery, there just seems to be a real problem with President Trump's perception of President Putin and of Russia, which we've sort of discussed before, that he feels as though he's got some sort of bond or special relationship with President Vladimir Putin, that there's nobody else seems to really think that that's the case either. And, you know, you see this in Trump demanding this truce talks and he put exorbitant pressure on President Zelensky of Ukraine to come to talks, which Zelensky has done, and Russia hasn't come to the party there. What's interesting now is, and we've seen some social media posts in the past couple of weeks from President Trump complaining about Putin, complaining about Russia's, you know, really quite savage attack on Ukrainian, you know, civilian infrastructure and these sorts of things. So there's a bill now in the US to put further sanctions on Russia. that would basically target India and probably mainly hit India and China. It's for countries that are buying Russian oil. They're able to do this on the cheap, and it helps fund Russia's war machine, which would probably be a pretty significant move if it happened. Now, it obviously would need President Trump's support. That's the sort of thing that might get Russia's attention again. We mentioned yesterday about the potential for a meeting between the leadership, President Putin and President Trump. Russia's made clear that's probably not on the agenda. So something like this is probably the next step. More pressure ramped up on Russia. It's the only way that you'll get Russia to the party. As I've always said, Russia respects force, it respects strength, it sees anything else as weakness.
All right, Bloomberg's Michael Heath there. Still to come on the Asia trade. The Toyota Group's plan to privatise Toyota Industries under fire from investors and analysts. We'll have more on that next. This is Bloomberg. Toyota Group shares will be in the spotlight when trading in Japan starts in the next hour. Its proposal to privatise Toyota Industries is facing criticism from investors and analysts who argue that the $33 billion deal undervalues the company. For more, let's get to Bloomberg's Danny Lee in New Delhi today. Danny, what more do we know about this deal, and what sort of reception is it going to get at the AGM next week?
Well, it's likely to get an interesting reception, that's for sure, when you look at the numbers on offer here. So basically the offer, the discount, the 16,300 yen a share offer is an 11% discount on Tuesday's closing price. But you have to go back to when this offer was originally made, and well, not the offer per se, but the reporting, which came from a Bloomberg News scoop. And the shares have since early April rallied 40%. But it doesn't sit well with investors and analysts who consider this to be undervaluing the company significantly. And it's at a moment where the Toyota Group and the Toyota family, they're trying to take greater control, right? And so therefore, by making this offer, it is seen as just not putting enough on the table. But at least for Toyota, who is Akio Toyoda, the Toyota Group chairman, who is leading this, he's got a lot of support from banks who are going to lend a couple of trillion for this privatization effort.
Danny, super quickly, I mean, there are some corporate governance concerns given all of the cross-shareholding in Toyota Group.
Yeah, and when you look at what Toyota is trying to do here is, he denies the fact that this is about taking greater control, but of course by taking this group private, it ultimately will give him and the family greater control of one of the world's biggest automakers. And given the previous criticism and concerns around the direction of travel for this company, so it remains to be seen what kind of reception there'll be at the AGM.
Bloomberg's Danny Lee there with the latest on Toyota. We'll be watching how that trading goes at the start of the markets in Japan. More ahead. This is Bloomberg.
Let's take a look at how futures are tracking in the Asia Pacific at the moment. We're seeing some modest upsides on most of these indexes. We did have some rather positive jobs numbers out of the US, or job openings numbers, although that series is somewhat volatile. We also heard from the Fed's Raphael Bostic saying once again the Fed's in no rush to move on rates. Expecting a little bit of upside for the Nikkei when we get going. Not on that board is the Kospi, of course, as well, which is hovering around 9-month highs. And we've just had a new president, Jae-myung, installed as well. We'll get more on that in a moment. Let's take a look at how commodities are tracking as well. Oil continuing to defy gravity despite all the extra supply that OPEC Plus is bringing on. A few other factors disrupting the supply side here, though, including wildfires in Canada which is affecting flows to US storage hubs. Russian crude shipments also falling. We've got gold prices ticking up just a little bit. Iron ore holding pretty steady at the moment, around $95 per tonne. Well, let's get back to our top stories. South Korea's opposition candidate, Lee Jae-myung, was elected president in a race that was largely a verdict on ousted leader Yoon Suk-yeol's botched attempt to revive martial law after decades of democratic rule. Joining us now is Rachel Minyoung Lee, Senior Fellow at the Stimson Centre's Korea Program. Rachel, thanks so much for joining us. Certainly wasting no time. The new president's been sworn in already. He's got a number of competing demands on both the domestic and international agenda. What's the first priority for President Lee?
I think, well, he's got a number of priorities on the domestic front. Lee has promised to grow the economy. I think he will focus on various economic issues. He has promised a number of domestic political reforms. So I think he will focus on those as well. On the foreign policy agenda, of course, there are a number of pending issues between South Korea and the U.S., such as tariffs and defense cost sharing.
Well, it was a tight victory, tighter than was forecast, but decisive nonetheless. But it was interesting that the two opposition candidates seemed to split the Conservative vote. Can you talk to us a little bit about the challenges that President Lee is going to have when it comes to uniting a country that was so divided over the past few months?
Lee has certainly promised to promote national unity. He walks into a very challenging situation because he is faced with a very divided nation politically. If you look at the map, the electoral map, on one side you have everything is blue, right? All provinces, so the Democratic Party. And then the other side of the map is completely red. So people who voted for the People Power Party, which is the Conservative Party that lost this election. So it really will be a big challenge for the new president to bring the country together.
Yeah, especially when it comes to his support among men in their 20s. It seems that the younger male voters in South Korea, 20s and 30s, they're even more conservative than male in their 70s. What does this demographic sort of societal look into South Korea tell you about some of the future policies that we could expect from the new administration?
So I think this again speaks to the divided nation that I just mentioned. As you mentioned, males in their early 20s or in their 20s, many of them voted for the Reform Party's Lee Jun-suk, and they tend to be conservative. On the other hand, you have many of the women, South Korean women in their 20s, who voted for Lee Jae-myung, who has now just been sworn in as president. I think that, again, this speaks to the divided nation, and President Lee will face that challenge of bridging that gap between genders and generations. And, gender equality issue is something that he has promised that he would tackle as a priority.
Yeah, he's very popular among young women here in South Korea. Let's talk a little bit about foreign policy, because, of course, that will also be very different from what we saw from the Yoon Suk-yeol administration. What do you expect to be the key changes?
I think the key change will be that President Lee will probably aim to seek more equidistance policy between the U.S. and China. Certainly, the Yoon administration made it pretty clear that it was aligning with the U.S., and it worked very hard to align many of its policies with the U.S. President Lee Jae-myung on the campaign trail has said that he wanted to mend ties with China and with North Korea as well. So I think what we'll see is more of an equidistance policy. Now, I don't know how well that would be taken by the Trump administration, because I think that there will be pressure from Washington for Seoul to take sides, to make its position more clear. Also, relations with Japan will probably not be as strong as that relationship was in Yoon Suk-yeol's time. The Yoon administration worked very hard to mend ties with Japan. I think that the new administration in South Korea will try to strike a more of a balanced approach toward Japan.
Lee Jae-myung has cautioned about striking a deal with the U.S. too quickly. what are we expecting on how he'll approach those trade negotiations with President Trump?
I think it'll be interesting to see how he responds to the various pressures that we can expect from the Trump administration. So far, the President Trump has not said much about South Korea, mostly because South Korea did not have a president. It had acting presidents over the last 6 months. Now that an election has taken place, I think we will see these negotiations moving more quickly. But I think it's I think it's a little difficult to expect at this point, or trying to figure out exactly how quickly or how well the new administration of South Korea will respond to Washington's demands.
One of the promises that candidate Lee made was to make some changes to corporate governance, break the grip of the family-run conglomerates, the chaebols in South Korea. What are his chances of success there, and now that he has an opportunity to try and enact that agenda?
Certainly, he comes in with a great amount of power. He has won nearly 50%, or about 50% of the votes, and we had the highest turnout in the last 28 years. So that speaks for something. And also the National Assembly is under control by his party, which is the Democratic Party. So I think he will, again, he has talked a lot about reforms, political and economic, and I think he will act swiftly to act on those promises.
Just finally, what now for former President Yoon and his supporters? Because, of course, the former president is still facing charges.
I think this election outcome was a biggest disappointment for the PPP supporters, including Yoon supporters. And Yoon still faces that criminal charge of insurrection. And again, I think this goes back to our earlier point about a very, very divided nation. Again, the opposition party's candidate Kim Moon-soo still managed to garner 42%. Now, still he didn't win, but that was a huge improvement over 2017 when the Conservative Party's candidate Hong Joon-pyo at the time only got 24% of the vote. So that's something that the new Lee administration will have to reckon with.
Rachel Minyoung Lee, good to have you with us, Senior Fellow at the Stimson Center's Korea program, as we continue to get the latest developments around the country. We've just heard from Japanese Prime Minister Shigeru Ishiba now congratulating President Lee on his election victory, saying that he wants to maintain communications with Seoul. Of course, we had heard earlier from Secretary Marco Rubio as well from the U.S. that they want to continue to deepen the U.S.-Japan-South Korea cooperation, as well as he delivered that congratulatory message. We're also hearing from Moody's. They're saying that President Lee is coming to power as South Korea grapples with challenges. Of course, we have seen South Korea maintain their sovereign credit ratings despite the 6 months of political turmoil. So we'll continue to watch the economy and also, of course, how markets come online in just about 20 minutes' time. Coming up on the Asia Trade, we'll continue these discussions with former South Korean Trade Minister Han-koo joining us to discuss what's next for the economy here. This is Bloomberg. South Korea's new president, Jae-myung, has pledged to move away from his predecessor's nuclear-focused energy strategy in favor of renewables. Ali Izadi leads Bloomberg's NEF's Asia-Pacific coverage and joins us now from Taipei. Ali, so what does the Lee presidency mean for Korea's energy sector?
So we're basically back to the shift in energy strategy that we have seen between previous Korean presidential administration. Just a bit of a context. So back in 2017, when the Democratic Party of Korea fellow member Moon Jae-in became president, he emphasized a nuclear phase-out policy, and then he wanted to ramp up renewables. Then in 2022, when President Yoon came in, he reversed that policy, favoring build-out of nuclear, and he was relatively less supportive of renewables, particularly on solar. Lee Jae-myung, when he ran his election campaign back in 2022, as well as this time around, has emphasized more renewables. Although, to be fair, unlike Moon Jae-in, he hasn't called out for nuclear phase-out. Rather, he has said that he wants to emphasize more renewables.
So can President Lee achieve these renewable goals? Are they realistic?
So what we'll probably see is similar to the Moon administration. We will certainly see a boost in support for renewables, and that will give some temporary increases in deployments. However, if you look at the targets that the government has set, even under the outgoing government targets, the annual installation levels required are far from what we are actually seeing in actual deployment. So even with the outgoing targets which were set under the Yoon government, you would have to have about 6.4 gigawatt of solar and wind capacity additions per year. Last year, that number was around 3.4 gigawatt. This year, we are only expecting about 3.1 gigawatt. And then for the foreseeable future, particularly during the administration of President Jae-myung, we're not expecting those annual additions to increase to the level required unless he undertakes some fundamental power market reforms.
So, Ali, what's really needed for Korea to meet its emission reduction targets then?
So one of the biggest issues, and Lee Jae-myung has referenced this, is the grid. So during his election campaigns, he has talked about building of an energy highway. Currently, Korea's grid expansion plans are way behind schedule. That means bringing on new renewable supply and connecting to the grid can be very, very challenging. Now, while he's talked about this, he hasn't directly addressed how he would be able to fund the grid expansion. South Korea's electricity system is owned by Korea Electric Power Company, which is majority owned by the state. And electricity retail rates are regulated. And now subsequent governments have tended to be very careful with allowing electricity retail prices rise due to political economy concerns. The result of this is that the state-owned utility a lot of time actually incurs significant losses. So since 2022, when commodity prices increased, this happened. KEPCO actually had losses exceeding over $20 billion. When you're incurring these significant losses, it's very difficult to then undertake capital-intensive projects such as grid expansion. KEPCO's own estimate is that by between now and 2038, it will need to spend about just over $50 billion on grid expansion alone. Where it's going to get this money from is a huge question that Lee Jae-myung would need to answer.
All right, Bloomberg New Energy Finance's Ali Izadi-Najafabadi there. We're still getting a few headlines coming out of South Korea following Lee's election win. We're hearing that South Korea's Lee has asked the Joint Chiefs of Staff to maintain a tight readiness. This being reported by Yonhap, the news agency, also said to be holding a phone call with the Joint Chiefs of Staff. So the first order of business appearing to be defense-related for the new president of South Korea, Shery.
Yeah, I mean, we were very much expecting this sort of process, very hurried, given that he's already president now, just a couple of hours ago being certified by the National Election Committee. But because the president is now the commander-in-chief of the Armed Forces of Korea in accordance with the Constitution, we know that President Lee Jae-myung has now received that briefing from the Joint Chiefs of Staff. Take a look at Kospi futures at the moment, pointing to the upside. Of course, we have seen a significant rally ahead of this election already. Up 4% last week, a lot of optimism over new stimulus measures coming from whoever won the presidency. Optimism also about corporate reforms. We know that Lee Jae-myung has wanted really that stimulus package to be more than 35 trillion won, which is around $25 billion consumers. So we'll continue to watch the markets ahead of the reopen in Seoul. Of course, we had a public holiday for Election Day. Our Asia stocks reporter Yoo-kyung Lee joins me now here for a preview. But Yoo-kyung, as I just mentioned, I mean, we saw such a rally already. What are you watching today to see sort of that reaction from the markets?
Sure. So Lee Jae-myung is somebody who has put growth and reform on the front and center, which bodes really well for the South Korean stocks. This is the bullish signals that investor will see for the Kospi, which has been rising up about like 12% so far this year. And the Kospi is just 2% away from entering the bull market from its April low. So we will definitely watch whether the Kospi finally enters the bull market when the market opens. And given the actions in the Kospi future, there is some chance that we might see that happening today, which could be a good way to cheer the new president's taking office.
I mean, we heard just from Bloomberg's Ali Izadi as well earlier talking about how renewables might be a focus for this administration as compared to the previous one. Are there any specific sectors that we should be watching?
Sure. So we've been talking a lot about the renewable energy because tackling climate change is one of the key priorities of President Lee Jae-myung. But I also want to talk about some of the gaming stocks and retailers and some of the companies in Korea that have exposure to China. Now we're going to see this new president improving ties with China. So investors may pay more attention to the game developer, entertainment style that could benefit from the improved relations with China. And that could also see where we see the interest in action coming today.
And how about the new president's economic or market priorities? What can we expect to see?
So I think the two things will be on the investors' mind in coming weeks. Number one is the extra budget, but another one is the amendment of the Commercial Act. Lee Jae-myung has said earlier this week that he will amend the Commercial Act, which could improve the corporate governance in South Korea within 2 to 3 weeks after he takes office, which could be one of the first things that he could achieve as the new president. And a lot of investors are paying attention to the revision in this Commercial Act because it could pave way for improving the corporate governance and improving the ways that the companies have been treating minority shareholders. So what will be in the amendment of the commercial code will be keenly watched during the first few weeks of Lee's presidency and could be the key momentum for the South Korean stock market.
Yeah, will he be able to turn that Korea discount into a Korea premium, right? Yoo-kyung Lee here joining us, our Asia stocks reporter. We're 10 minutes away from the market opens. We have more ahead. This is Bloomberg.
Chinese startups are advancing AI-powered humanoid robots for factories, homes and schools at an unprecedented pace. Bloomberg's tech reporter Annabelle Jewellers explores their rapid rise and global impact.
It's not your average dance class. This video is from a Chinese robotics startup called Engine AI. Watch the humanoid mimic the instructor.
Nice!
The company says no AI generation or CGI was used in the making of this video, and that this robot could replicate the steps from the film Kung Fu Hustle within days. We saw similar moves in February during the annual Spring Festival Gala. Humanoid capabilities are expanding fast, from backflips to front flips. And now this from Unitree's G1, a side flip that most actual people could not perform. But these androids are about to do more than just entertain. At least in China, already there's video that shows humanoids training with local police in Shenzhen, working on factory floors, and teaching children in Sichuan province. China is quickly integrating humanoids into myriad commercial trials and use cases. This pace of development is not lost on the West.
Every technological aspect is now considered through the prism of national security. So I think governments around the world are racing towards this kind of more autonomous development of technological capabilities. And I think that the Chinese, in a way, have really gotten a head start.
Of the 10,000 humanoids set to be manufactured globally this year, more than half are expected to come from China. It's another sign of the country's leadership in the industry. that Citibank estimates could be worth $7 trillion worldwide by 2050. For Washington, it also illustrates why measures to curb China's technological ascent may not work.
I mean, I think you're going to have different tech stacks moving forward. I think you're going to have different standards. And I'm not sure that Western standards are going to be the ones that proliferate around the world.
While the US has formidable players in robotics, including Tesla and Agility, even Elon Musk is worried about falling behind, despite voicing confidence in his Optimus device.
With respect to humanoid robots, I don't think there's any company in any country that can match Tesla. I'm a little concerned that on the leaderboard, ranks 2 through 10 will be Chinese companies.
A race between humanoids and humans in Beijing in April showed this new technology still has a way to go. Only 6 of the 21 robots competing made it to the finish line intact and within the time limit. Yet China is sticking with ambitions to dominate the industry worldwide, especially as the costs of machines come down and as working populations age. China has earmarked nearly $140 billion for robotics and high-tech in the next 2 decades, far more than the US and Europe, to take humanoids from what's been seen as a novelty idea into the real world. Annabelle Drulers, Bloomberg News, Hong Kong.
Still ahead, an exclusive interview with Engine AI about the company's efforts to bring humanoid robots to households. And Bloomberg Digital subscribers and terminal clients can join Annabelle for a live Q&A on Chinese humanoids at 9:15 a.m. Hong Kong time, which is 11:15 a.m. in Sydney. Take a look at how we're setting up for the market opens in Korea after a public holiday for the election of President Jae-myung. We are expecting the inauguration ceremony to happen in a few hours this morning. We have already seen a huge rally in the Kospi. Could we get to a bull market? We're up about 18% from early April already. Futures pointing to more upside after gains of about 4% last week as well. We have seen optimism about more corporate reforms, more new stimulus measures. We're talking about, $25 billion that President Lee wants to see in a stimulus package. The market opens in Seoul, Sydney, and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. We're watching South Korea after they come back from the public holidays with the election of President Jae-myung. The congratulatory messages are rolling in. Paul, we're talking about Prime Minister Shigeru Ishiba of Tokyo now saying that he wants to hold a summit as soon as possible with Jae-myung. Of course, diplomatic relations with Japan could get tricky given the Democratic Party's historical grievances against Tokyo. But of course, also in focus, relations with the United States at a time when President Trump has doubled the steel and aluminum tariffs.
Yeah, that's right, Shery. Those tariffs are coming into effect today, so we're going to be watching Hyundai Steel in particular to see if there's any reaction there. But a lot for the new president to get done, potentially a call to President Trump, but also a lot of healing to do domestically as well.
It's been a very divided country here in South Korea, especially given that the political turmoil has lasted for 6 months. We have seen, of course, South Korean assets, despite the political turmoil, gain ground ahead of the snap elections. Could we get to a bull market? We're up about 18% from early April already. We had seen 4% gains last week ahead of the elections as well. We have seen more corporate reform promises coming from President Lee in the campaign trail, new stimulus measures promises as well. Lee, in fact, wants to see a $25 billion stimulus package as soon as possible. Take a look at how the Korean won is now trading at the moment, strengthening against the U.S. dollar, 13.75, despite the fact that we had dollar strengthening in the overnight session. When it comes to the Kospi, we are seeing now gains of more than 1% early at the open. And this, of course, as I mentioned, after already gains in the past couple of months. We had seen consumer prices, though, though, rising only 1.9% year on year. And this came in below economists' expectations, really reflecting the soft domestic demand in this country as a fragile economy still needs to heal from months of political turmoil. Take a look at how Japan is also coming online. We had seen 3 sessions of losses for the Nikkei already. The Japanese yen had also weakened against the U.S. dollar in the past few sessions. We are seeing it now trade a little bit stronger at that 143 level. The Nikkei coming up 0.6%, while the Topix is also gaining ground. One stock that we'll be watching today, Toyota Industries, because we're hearing more criticism from investors about Toyota Group wanting to privatize that company, Paul.
Let's take a look at how we're tracking in Australia in the early going. It is, of course, a staggered open, so we're up just a few points at the moment. The Aussie dollar still holding on just below that 65 cents US level, although we are seeing it weaken significantly against the Kiwi. We're approaching levels there that we haven't seen since the start of last year. Take a look at oil prices as well. They are defying gravity despite those increases we've had from OPEC+. Prices rising for a second day. A lot of disruption here due to Canadian wildfires, which have shut down about 350,000 barrels a day of heavy crude production. Of course, US debt just open for trade as well. Not a lot of change there. The 10-year yield currently just below 4.45%. We did hear from the Fed's Raphael Bostic today. Says they're in no rush to move on rates. They want to see a lot more progress on inflation, but certainly on the jobs front, the labour market's still looking strong. Job openings coming in stronger than expected in April, just under 7.4 million openings. But that JOLTS report, notoriously choppy data, Shery.
All right, Paul, let's bring in Daniel Yoo, Head of Global Asset Allocation at Yuanta Securities. Daniel, really good to have you in our brand new Seoul studio, which this is the first time that you're coming in here.
Yes.
Really good to have you on a day so consequential like today. It's really interesting to see the Kospi gaining ground because I thought, given the rally ahead of the elections, that we might see a little bit of sell the news. What does this tell us about the mindset of investors watching Korea right now?
I guess the investors are looking for stability in terms of market. A lot of people are quite confused about what's happening. As you know, the domestic consumption is very poor. Valuation is extremely cheap, but we are not sure about what the earnings are going to be look like. So everybody were very confused. But now with the new president coming in, there will be some stability in terms of what kind of policy will be coming in, how to boost the domestic consumption, or how to change a lot of the things that has happened, resulting into a quite significant improvement in terms of the GDP growth rate. As you know, Korea's GDP growth rate expectation is very poor at 0.8%, which is extremely low compared to the history. So I think if that number needs to be brought up to probably 2%, I think people are looking for some kind of measures from the government.
But we know globally when it comes to the economy and how markets and investors moved, it can be a little bit diverging. When it comes to the markets itself, yes, we got some stability politically, so we're seeing this short-term boost. What about long-term health of the financial markets in South Korea? Because we've heard from Lee Jae-myung that he wants protect minority shareholders, to really improve the situation with the chaebol conglomerates and their grip on the economy as well.
Right, I think that's a very important factor. If you look at the Korea's U.S. Interest rate right now, it's only about 3% or less, right? That means that if you are doing a proper buyback and cancellation of shares and also returns to the minority shareholders, then the P multiple could expand to similar to Taiwan or Japan, which is about 25 times. But if you look at Korea, it is only at around less than 10 times. So if you increase the payout ratios from current 20 to 25%, all the way up to maybe 50% gradually, that could boost the equity market perspective.
We've got steel tariffs coming into force a little bit later on today as well. Korea's auto and electronics industry also very exposed, the whole economy exposed to trade. I guess we can anticipate a call between new President Lee and President Trump very, very soon. But how do you expect markets to respond to this? Is the worst priced in and is the only way up from here in anticipation of some good news?
Well, we're not sure about that part because yet, in terms of the trade policies, if you look at Korea, it has about surplus of about 50 billion plus against the U.S. Obviously, that will cause a lot of high tariff increases. And also what that means is that Korean companies need to probably expand to U.S. in order to increase the sales numbers. So I think that's something that needs to be taken care of over the next course of time. It's not going to happen immediately, so we need to look at what the numbers look like in terms of trade surplus numbers and also what's looking like in terms of the export numbers. But I think one factor is that the government has much more room to maneuver, meaning that if you look at the private sector debt, it is very high. So what most important factor is now is the government's budget increases to boost the economy. So I think there will be a lot of changes that are happening where if there is a tariff increases for the corporations, there will be some government subsidies happening probably gradually. So therefore, in terms of the fundamental of the companies might not be too it won't be too much destroyed. So what that means is that gradually we think that overall market will look quite reasonably well, and a lot of the things are already priced in terms of share prices.
Yeah, of course, it's not just Korea dealing with an uncertain tariff environment. It's any country that has the US as a major trading partner. How are you trading around this uncertainty?
Well, I mean, we're basically looking at any of the sectors that are showing very significant growth, which means the AI sectors, anything related to IT segment, or hardware related to the technology side. So we continue to focus on companies that are focusing on U.S. trade as well as China in terms of how they're continue to gain market share in this sector. So if you look at Korea, obviously Korea has very strong strong market share in terms of the semiconductor businesses, especially hardware sector side. We think that that should continue, and I think the Korean government as well as Korean company would probably establish very strong presence in U.S. Through building production facilities over there as well, and also various sectors that has external implications rather than internal. If you look at domestic consumption side, it seems to be quite poor, and it's going to be poor continuously in the future. So I think we've got to focus on the export-related companies and also the global AI sector that we're focusing on right now.
When it comes to the broader Asian markets, we have seen, of course, the dollar fluctuating a lot, especially depending on how eco data comes out of the U.S. What are the implications for some of those export-reliant economies across Asia? And are there any particular ones that you're more positive about?
Well, if you look at the currency-wise, I mean, we were worried about how the Korean economy being very poor in terms of domestic consumptions and a lot of the private sector debt being very poor. We thought that Korean won will continue to depreciate, which means that that will be positive news for the exporters. But at the same time, right now, we are seeing that the export will be controlled by the government as well as the U.S. tariff, right? So if what that means is then we need to have a stronger strategy. I think the currency is not going to depreciate further. I think that most likely the Korean won or any of the Asian countries, the currency would probably appreciate or gradually stabilize as the tariff increase happens. So if that's the case, then I think that most of the country you are investing on is that you got to look at any of the sector has a global competitiveness, and despite the currency movement, if you continue to be able to grow the businesses, if it's not like necessarily the price competitiveness that puts in the strong, but if it's the quality of the product, I think that should be the focus. So I think that we got to focus on countries like Taiwan and Korea and Japan if you look into this sector of the growth area.
Daniel Yoo, really good to have you with us. He's head of global asset allocation at Yuanta Securities, of course, following the markets for us as we continue to watch the broad markets here in South Korea. We are getting some market moves, not only in the equity space, but also in the bond markets. We are now seeing that fall in the 10-year bond futures after the election holiday. And there had been already some estimates that we might see Korean bond yields rising, of course, given the debt load that South Korea might see after the election of whichever candidate, given the stimulus measures that they've promised. But Lee Jae-myung himself has actually wanted to have a $25 billion stimulus package. So that might really weigh on the sovereign bond space. And this at a time as the Bank of Korea has also turned more dovish given the state of the economy. We have seen the May CPI numbers rising less than economists forecast at 1.9% year on year. They're coming out saying that the inflation rate may ease in the second half on oil costs dropping as well as weak demand. Let's get more on the Korean election with Bloomberg economist Hyo-sung Kwon, who joins me now here in the studio. Hyo-sung, let's talk a little bit about the economic implications, of course, of the win by Lee Jae-myung.
So Lee Jae-myung's victory in the Korean presidency election means a clear pivot toward to a more active role of the government in steering the economy. First of all, I expect the Lee Jae-myung administration will roll out at least 35 trillion won extra budget bill sooner than later. That will lift South Korea's GDP growth by 0.2 percentage point this year and 0.3 percentage point next year. And also, I expect the new government will expand the fiscal plan for next year over 5% compared to this year. The bigger picture, though, is the direction of policy direction. So Lee Jae-myung will push for a state-led growth, focusing with a strong industrial policy, focusing on AI technology and green technology. Having said that, the risk lies in his fiscal plan, how it will be funded and how it will be allocated. So his fiscal stimulus continues to focus on transfer payments, because that is the politically popular, but it would not boost the long-term productivity. Then it will raise concern about the fiscal soundness of South Korea. Even worse, if his fiscal stimulus is not backed by a solid and plausible funding plan, then investors would start questioning the long-term trajectory of the South Korea's government bond. If confidence erodes in the worst case, then the funding cost of South Korea will rise significantly, as we saw in the U.S. recently and in the UK back in 2022.
Right, we see bond vigilantes coming into the market, right? But given that Lee Jae-myung and his party hold the majority in parliament, how easy will it be for him to really push these economic measures? How much does that help? But also, as you mentioned, if we continue to see these populist measures, how much could this hurt the economy? And I guess in that sense, where does the Bank of Korea play into all of this?
Right. So in the near term, I think there will be no big change for the Bank of Korea's policy stance. I expect the BOK will cut 25 basis points in August and in November, bringing the base rate to 2.0% by this year, end of this year. But probably in the next year, more aggressive fiscal stimulus would ease the burden of the monetary policy, so that potentially slow the Bank of Korea's monetary easing.
Hyo-sung Kwon, really good to have you with us. He's the Korea economist here at Bloomberg, and of course dissecting what the South Korean elections mean for the broader economy as well. We'll be talking more about that, especially given the President Trump tariff threats. We'll be discussing with former Trade Minister Han-koo. Paul.
Let's take a look at some of the stocks that are moving at the moment. We've got Toyota Industries off by about 13% right now. There is, of course, a controversial plan to privatise Toyota Industries that's drawing a fair bit of criticism from analysts and investors as well. There's a lot of complex cross-ownership of Toyota Group companies and also some concerns that the price for taking Toyota Industries private might be a little bit on the low side. Watching Hyundai Steel as well, losing a little bit of ground because, of course, President Trump's new and higher steel and aluminium tariffs are coming into force today. Take a look at Woodside Energy here in Australia, moving quite strongly to the upside in the early going. We are seeing an oil price that remains strong despite all the additional production we're seeing from OPEC+. S-Oil Corporation also rising there. Those rises in supplies being offset by concerns elsewhere, particularly in Canada, with wildfires disrupting flows to US storage hubs. We're also seeing Russian crude shipments falling as well. Now, in terms of the Toyota Industries matter, we're going to be live in Tokyo next for some more analysis on Toyota's proposal to privatize that company. Stay with us for that story. This is Bloomberg. Toyota Group shares are in the spotlight as its proposal to privatize Toyota Industries is facing criticism from investors and analysts who argue that the $33 billion deal undervalues the company. Bloomberg senior editor Reid Stevenson joins us now. And Reid, we're seeing Toyota Industries stock falling about 12.5% at the moment, so the market giving its verdict on this deal. What are the details here, and does the price being suggested seem a little on the low side?
Indeed. I mean, we heard from a bunch of shareholders, analysts, really all almost in one universal voice saying this is a discount, too much of a discount to the shares. Now, essentially what Toyota is saying is that the offer on the table is 16,300 yen per share is a significant premium to the price before Bloomberg broke the news in late April that Toyota Industries was considering this buyout by a group led by Akio Toyoda. But at this point, the shares have gone up around 40% since then. So this now represents a discount, which some even essentially say it's a discount to intrinsic value for the company, which even should be higher than the close we saw yesterday, around 18,000. And so really, you're going to see a battle playing out between this group seeking to take Toyota Industries private and minority shareholders who are going to have something to say about that.
Yeah, so tell us a little bit, Reid, about perhaps corporate governance concerns surrounding this deal as well.
Mm-hmm. Indeed. I mean, the Japanese government has been pushing for a while now to have companies unwind what they call parent-child relationships. So a parent company owning a hefty chunk of the subsidiary. Often that means that the parent company has influence over what the smaller company will accept in terms of a buyout price. And so, concerns about buying companies on the cheap emerge. Of course, in terms of governance, getting rid of this relationship is a good thing. But I think essentially the issue is you have to do it at the right price in order for really the true spirit of improved corporate governance in Japan takes root. Otherwise, it just sends the opposite signal that this is, in fact, bad corporate governance.
Yeah, Bloomberg senior editor Reid Stevenson there as we continue to see the downside pressure on Toyota Industries. We have more ahead. This is Bloomberg. Right. Take a look at how Asian markets are trading right now. We're seeing the Nikkei gaining 0.9% after already 3 sessions of losses. So we're seeing a rebound with the Japanese yen also strengthening after weakness against the dollar. The Kospi rallying 1.8%. And this, of course, as we're already around those 9-month highs, very close to that bull market territory. We're up about 18% or more from early April. So the ASX 200 also gaining about 0.5%. We're watching those GDP numbers out of Australia to confirm that potential slowdown that we're seeing in that economy. In the meantime, we're also getting the PMI numbers out of Japan for the final figure for the composite Jibun Bank PMI. 50.2 is the number. The previous preliminary number had seen it actually contract, so we're actually in expansionary territory again. The PMI services number coming in at 51, also improving from the previous month, Paul.
We're also getting PMIs out of Hong Kong for the month of May, coming in a little bit stronger than the month prior, reading of 49 there, although still below 50. We've got the Hong Kong dollar reversing away from the weaker end of the band right now, trading 784.55, but it is hovering around levels that we haven't seen since May the 4th of 2023. So we've got PMIs, as I mentioned there, coming in 49 for the month of May. 48.3 was the reading back in April. Let's get the latest now from the corporate front. Hyundai and Kia have sold about 136 million shares in Ola Electric. That's just days after the Indian e-scooter firm posted quarterly losses that more than doubled. The South Korean automakers have invested $300 million in the company back in March 2019. And that share sale comes as Ola Electric faces operational delays, weak demand and rising competition. Chinese EV maker NIO says it aims to reduce research and development spending to reach its break-even target by the fourth quarter. It expects expenses to drop to nearly $280 million, marking a 25% fall from last year. The company outlined the plan after its first quarter revenue missed estimates, despite seeing higher deliveries. Meta has announced it will buy power from a Constellation nuclear plant to help meet its AI demands. It signed a 20-year contract to buy more than 100 megawatts from the biggest US nuclear operator starting mid-2027. Meta is contracting for more power after its total electricity consumption nearly tripled from 2019 to 2023. Shery.
And Paul, after years of U.S. companies like Boston Dynamics and Elon Musk's Tesla leading the development of humanoid robots, Chinese startups are now making rapid advancements using AI. Bloomberg's Annabelle Drillers has more on the technology and its global impact.
It's not your average dance class. This video is from a Chinese robotics startup called Engine AI. Watch the humanoid mimic the instructor. Nice. The company says no AI generation or CGI was used in the making of this video, and that this robot could replicate the steps from the film Kung Fu Hustle within days. We saw similar moves in February during the annual Spring Festival Gala. Humanoid capabilities are expanding fast, from backflips to front flips. And now this from Unitree's G1, a side flip that most actual people could not perform. But these androids are about to do more than just entertain. At least in China, already there's video that shows humanoids training with local police in Shenzhen, working on factory floors, and teaching children in Sichuan province. China is quickly integrating humanoids into myriad commercial trials and use cases. This pace of development is not lost on the West.
Every technological aspect is now considered through the prism of national security. So I think governments around the world are racing towards this kind of more autonomous development of technological capabilities. And I think that the Chinese, in a way, have really gotten a head start.
Of the 10,000 humanoids set to be manufactured globally this year, more than half are expected to come from China. It's another sign of the country's leadership in the industry that Citibank estimates could be worth $7 trillion worldwide by 2050. For Washington, it also illustrates why measures to curb China's technological ascent may not work.
I mean, I think you're going to have different tech stacks moving forward. I think you're going to have different standards. And I'm not sure that Western standards are going to be the ones that proliferate around the world.
While the US has formidable players in robotics, including Tesla and Agility, even Elon Musk is worried about falling behind, despite voicing confidence in his Optimus device.
With respect to humanoid robots, I don't think there's any company in any country that can match Tesla. I'm a little concerned that on the leaderboard, ranks 2 through 10 will be Chinese companies.
A race between humanoids and humans in Beijing in April showed this new technology still has a way to go. Only 6 of the 21 robots competing made it to the finish line intact, and within the time limit. Yet China is sticking with ambitions to dominate the industry worldwide, especially as the costs of machines come down and as working populations age. China has earmarked nearly $140 billion for robotics and high-tech in the next 2 decades, far more than the US and Europe, to take humanoids from what's been seen as a novelty idea into the real world. Annabelle Drulers, Bloomberg News, Hong Kong.
And subscribers can watch us live and see our past interviews on our interactive TV function, TV Go. You can also dive into any of the securities or Bloomberg functions that we talk about, and you can become part of the conversation by sending us instant messages. You can check that out at TV Go. Welcome back to the Age of Trade. Here are some of the big stories that we're following. President Trump has signed an order doubling steel and aluminium tariffs to 50%, which would take effect on June 4 in the US. Trump says the additional levies will support domestic industries and eliminate what he calls the national security threat of imports. Tariffs on the UK will remain at 25% to allow the two sides to work out new taxes or quotas by a July 9 deadline. The US Trade Representative has sent letters to trading partners to remind them of an upcoming deadline in tariff negotiations. The White House says the letters are a friendly reminder and the president expects good deals. Reuters earlier reported that the administration drafted a letter demanding countries provide their best offers by Wednesday. NATO is said to be asking EU member states to dramatically expand ground-based air defence capabilities. Sources say defence ministers will discuss the move at their meeting on Thursday in Brussels. It's part of a broader ambition to raise military spending across the alliance under pressure from President Trump. Dutch Prime Minister Dick Schoof has resigned, setting the stage for a snap election. He was forced to step down after far-right leader Geert Wilders pulled his Freedom Party out of the coalition government over a dispute about asylum and immigration policy. Schoof will continue in a caretaker role until a date is set for fresh elections.
In recent days, I have repeatedly informed all four party leaders that, in my opinion, the fall of the cabinet was unnecessary and irresponsible. We face significant national and international challenges, and decisiveness is required more than ever. This is crucial for the security of our resilience and the economy in a rapidly changing world.
South Korea's new president has pledged to revive economic momentum following 6 months of political chaos spurred by his predecessor's martial law declaration.
For the first duty you have entrusted me with, I will make sure there is no more military coup d'etat, and the power entrusted by the people will never be used to intimidate people.
But Yi's victory speech did not necessarily address the ongoing trade negotiations with Washington. Of course, President Trump has threatened a 25% across-the-board tariff on Korea, which he paused for 90 days to allow for negotiations. Let's discuss the trade outlook with PIIE Senior Fellow and former South Korean Trade Minister Han-koo, who joins us here in the Seoul studio. Thank you so much for making it into the studio this morning.
Yeah.
I mean, it was really a busy evening, wasn't
Yes.
it? Just trying to follow the election results.
Right.
But when we talk about this pragmatic diplomacy that President Lee Jae-myung wants to follow in his term, what does that exactly mean when it comes to negotiations against Washington?
I think right now this time needs pragmatic, leadership, and I think the Korean people have clearly chosen, this kind of a mandate, which is restoring democracy and also recovering the economy. I mean, the trade data in May shows that already Korea's export to the U.S. has decreased by 8%, and then still 21%, automobile 32%. So I think there's a sense of urgency that the new administration have to put this negotiation with Trump administration as one of the top priority with this new incoming President Lee.
How are we expecting him to approach the negotiations when we know that he's left-leaning, that he's from the Democratic Party? They have sort of a different view from relations with the U.S., relations with China, Russia, North Korea as well from the previous administration?
Yeah. As I mentioned, time has changed. I mean, from 3 or even 4 years ago, the geopolitical landscape in Asia has radically changed. So I think during the campaign, the Democratic Party as well as this, President Lee has expressed that this pragmatic approach, which is kind of anchoring this U.S.-Korea strong military alliance at the center of all these, kind of diplomatic issue. And also, of course, I mean, Korea cannot afford to antagonizing 1.4 billion neighbors just in their backyard. So sort of maintaining kind of stable relationship with China. And also, I think the Korea and Japan are strategically aligned right now. I mean, in this geopolitical as well as economic issues. So I think that this new government and President Lee will take a very pragmatic approach.
Interesting, one of the first leaders to congratulate Lee Jae-myung was Prime Minister Ishida, saying that he wants to energize the relationship with South Korea. Of course, that relationship could get tricky depending on where the political parties in the left-leaning administration goes. But when it comes to the broader relationship, as you mentioned, with China, what are we expecting from the Lee administration when it comes to balancing the relationship with the U.S. as well? Because the U.S. will want the imposition of export controls, which of course aren't great for a tech exporting economy like South Korea.
Yeah. I think right now this security environment in the Korean Peninsula is really, kind of serious. The North Korea is really getting close to Russia and sending, these soldiers to the war in Ukraine, etc. So I think that this more than any time, this strong and stable military alliance between U.S. and Korea would be really critical. And when it comes to this geopolitical tension between the U.S. and China, as you mentioned, some of these export control measures in the high-tech sectors, I think, this is also related to sort of extraterritorial kind of compliance issue. So I think if the Korean this product use U.S. software and kind of fundamental technology from the U.S., there's no other way but to comply with this U.S. legislation. But still, the reality is that the Korean manufacturing sector is really closely intertwined with that of Japan and China. So also, I think it is to the benefit of the U.S. and global economy that this kind of supply chain could be stabilized in the East Asia.
Shery mentioned a moment ago that Prime Minister Ishida of Japan was among the first to call new President Lee and congratulate him. Obviously, Korea and Japan have a challenging and difficult past, but are there some areas that they could work together as well, particularly an investment around the U.S. To appease some of President Trump's wishes?
Yeah, I think, Korea and Japan are facing very similar situation when it comes to dealing with this Trump administration. I mean, two countries are really strong advocate on rule-based international order. And then when it comes to steel, automobile, etc., and also shipbuilding industry, I think there is a lot to offer for Japan and Korea to this U.S. Trump administration because reviving this manufacturing sector in the U.S. is really top priority. And I think Korea and Japan can provide that sort of partnership and kind of support to this reviving the U.S. manufacturing sector. So beyond this kind of a short term, I see that there is a kind of a bright spot between Korea and Japan and the U.S. kind of future cooperation.
Yeah, and against the backdrop of a difficult trade relationship with the US, is there a greater role to play here for regional Asian trade alliances as well? Can you see South Korea potentially joining the CPTPP in the next few years?
During this Moon Jae-in administration, under which I serve as trade minister, is another kind of progressive government. Actually, joining CPTPP was one of the top priority. And again, right now, the geopolitical landscape as well as this economic, kind of landscape have change. And I think that it is a logical kind of step for countries in Asia, including Korea and Japan, to collaborate through this kind of plurilateral and more kind of rule-based international order.
Rule-based international order, but I wonder how trusting are South Koreans now of any deal with the United States? Because I remember covering the Chorus FTA, how difficult it was to sign that. We saw protests around Gwanghwamun because of the American beef issue, and now all of this seems to have gone down the toilet and they have to start all over again.
Yes. I think, this Korea being slapped with 25%, actually highest level among all the U.S. FTA partner. I think that is really unfair and kind of harsh treatment for Korea. But I think, partly there was really leadership. I mean, due to the leadership vacuum in Korea. I mean, Korea didn't have really, good leader to kind of speak one-on-one with, Trump, with kind of FaceTime. So I think with this kind of strong leader elected, last night in Korea, I think I remain, kind of positive that now it's time for two countries to really engage constructively, to really forge kind of forward-looking and win-win partnership.
Given that you've seen so many trade negotiations over the course of your career, what can South Korea really offer the Trump administration that might appeal also to President Trump personally himself, because he plays such a big role in deciding what's taken by Washington?
Korea is the sixth largest trading partner to the United States. And in fact, the Korea-US FTA has really benefited, the United States. For example, the beef. The Korea is the largest market for US beef in the world. It's bigger than 1.4 billion Chinese market. And also, as I mentioned, US really needs to kind of bring back this manufacturing and rebuild the shipbuilding and semiconductor batteries, etc. And in many of those areas, Korean companies are interested in investing in the United States. In fact, for the last 2 years, Korean companies were number one in terms of investment in the U.S. Not just investment, but greenfield investment, just building factories from scratch. So in this sense, I think Korea has a lot to offer to Trump administration.
Especially given that now when it comes to industries, when it comes to supply chains, Washington wants trusted allies to take part in that business, right? I was speaking to Han-Hwa, the defense contractor, and he was seeing all of these opportunities in shipbuilding because Washington wants to work with companies that are from countries that they trust. How much opportunity is there in these more sensitive sectors?
I think there's a great potential for U.S. and Korea to collaborate in this sector. In fact, last year, Korea's investment in the U.S. was 15 times bigger than Korea's investment in China. So actually also Korean companies are sort of pivoting from previous reliance on Chinese investment, investment in China towards this, kind of investment in the U.S. So I think there's a great momentum building, in terms of, the investment and the manufacturing cooperation between the Korean companies and the U.S. So what I'm worried about is, unless this massive tariff, this reciprocal tariff, 25%, automobile, steel, yesterday was kind of heightened to 50%. So unless this kind of very uncertain and kind of damaging tariff is addressed, I think this momentum may be kind of lost. So I think what we need to do, what the new Korean administration needs to do is to really work together with Trump administration to force really win-win and cooperation in many of these promising areas for cooperation.
Do you think the latest pushback against liberal trade, the World Trade Order, the global order that has existed since the World Trade Organization was set in place post-World War II, the pushback that we're seeing now, especially from Washington, especially from the Trump administration, do you think this will stay beyond this presidency?
I think, we have to see the kind of changing political dynamics in the U.S. And, starting from this deindustrialization in the Midwest and kind of, the emergence of big, China and so on and so forth. So I think, this kind of a new trend, new normal of some sort of a protectionism and industrial policy and sort of a re-globalization, I think this may stay beyond this current administration. Although the extent to which, we can see this uncertainty, volatility may kind of adjust. But this kind of a new normal may, stay for a while.
Han-koo, really good to have you with us. PIIE Senior Fellow and former Trade Minister of South Korea joining us here in the Seoul studio to dissect what this election of President Jae-myung means for the country and for global trade. This is Bloomberg.
All right, let's take a look at how a couple of big stocks in Japan are doing. Toyota Industries is off by 11.7% at the moment. It was worse than that before, so that's an improvement, in fact. Toyota Motor, meanwhile, better by 1.8%. What's happening here is there is a plan to privatise Toyota Industries. That deal worth $33 billion. It's attracting a fair bit of criticism. Analysts and investors concerned that that price is a lowball offer. There's also a very complex cross-ownership of Toyota Group companies that this deal does absolutely nothing to address in terms of transparency. So Toyota Industries losing ground here. What's gaining ground, however, the Kospi is up very strongly, up 20% from the April low, now on track to enter a bull market. And this, of course, after that decisive but tighter than expected election victory for President Lee. Shery.
Yeah, we're on track for that bull market. Of course, 4% also gains last week already. And they're leading really the MSCI Asia Pacific higher, which is 0.3% gains across Asian stocks. Japanese stocks also are reversing 3 sessions of losses to gain 0.7%. The China show is next. This is Bloomberg.